both politically now, there's some green lights on it, and then also liquidity-wise, uh, while there's potentially some bumps in the road, I don't really see like a major negative turn in liquidity, and therefore I generally expect that we probably will see higher highs in Bitcoin this year.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. Macroeconomic analyst Lyn Alden has highlighted that, although investors are concentrating on the Federal Reserve's forthcoming monetary policy decisions, the true systemic risk is rooted in fiscal policy. In the coming months, the U.S. Treasury plans to infuse more than $600 billion into the economy, potentially generating a liquidity shockwave with significant implications for financial markets. The anticipated influx of capital is likely to favor asset holders significantly, thereby intensifying the existing wealth inequality. The infusion of liquidity results from increasing deficits and ongoing government expenditures, which in turn exacerbates inflationary pressures and disrupts capital allocation. Individuals holding real estate, equities, and fixed-rate debt are positioned to benefit considerably given the inflation of asset values. In contrast, potential home buyers are encountering significant affordability challenges stemming from increasing mortgage rates, which has resulted in many remaining in the rental market as institutional investors continue to consolidate their real estate portfolios. The expanding disparity between asset holders and the general populace underscores a K-shaped economic recovery, characterized by the affluent thriving, while middle and lower income demographics face challenges with stagnant wages and rising expenses. Alden posits that this cycle should not be viewed as a market anomaly, but rather as an inherent characteristic of the existing financial system. The influx of liquidity is contributing to rising asset prices, which in turn diminishes the purchasing power of cash. This erosion of savings is leading to a heightened dependence on more volatile investment options. The actions of the Treasury, in conjunction with the Federal Reserve's tightening measures, contribute to a volatile and unpredictable economic landscape, diminishing the reliability of traditional economic indicators. In the current environment, Bitcoin is increasingly being recognized as a safeguard against excessive monetary and fiscal policies. The limited supply and decentralized characteristics of Bitcoin position it as a compelling alternative to traditional assets that are susceptible to inflationary pressures and regulatory actions by governments. The trend of institutional adoption is on an upward trajectory, as Bitcoin exchange-traded funds, ETFs, create additional avenues for capital inflows. Furthermore, sovereign entities and corporations are progressively recognizing Bitcoin as a reserve asset, thereby solidifying its significance in an environment characterized by escalating financial instability. In the future, experts caution that the interaction of liquidity injections, monetary tightening, and fiscal expansion may result in increased distortions, asset bubbles, and possible crises. Should inflation continue to be a persistent issue, it is likely that central banks will have to uphold elevated interest rates, thereby raising the risk of debt crises in sectors that are heavily leveraged. In the event of a substantial slowdown in economic growth, it is plausible that policymakers could shift their strategies, potentially leading to a resurgence of speculative investment in risk assets such as cryptocurrencies. Alden's warning highlights the importance for investors to approach this period with a keen awareness of the influence of fiscal policy, alongside monetary decisions, on market dynamics. Individuals who identify these changes promptly may enhance their ability to safeguard and expand their assets, whereas those who overlook the potential risks might end up at a disadvantage in a progressively divided economic landscape. And lots of things Lyn Alden discusses, so please watch the video. To end and like, share this video, and subscribe our channel Everyday Finance. Thanks.
Intermediate term, I think that Bitcoin is still too small to be super relevant for the things we're discussing here at a 2 trillion market cap. It's probably still too small to really kind of enter these discussions. Um, uh, Now, if you so I any sort of decisions around strategic Bitcoin reserve are probably separately considered than trade for the most part. Um, and so, while that could be certainly beneficial, it's certainly beneficial for Bitcoin price. And if I was advising any entity, whether it's a corporation, whether it's a family, whether it's a country, it'd be like, yeah, you probably should have some Bitcoin. If your goal is to maximize whatever thing that you're running, owning more Bitcoin is probably going to benefit you in the long run. So we'll see how that goes. If we look out long enough, then things like Bitcoin and having a Bitcoin reserve can actually affect some of these trade dynamics because one of these solutions to having a structurally overvalued dollar and therefore a structural U.S. trade deficit, is to instead have more international contracts and more international reserve stored in neutral reserve assets. There's basically two methods. One is you either have a more multipolar currency world, so you say, okay, so some reserves are in dollars, others are in euros, others are in Chinese yuan, and a couple other major ones, or excess reserves and storage are kind of held in gold or Bitcoin. Um, and now the problem is that the current, the upcoming Treasury Secretary has specifically said that they want to keep the dollar as the global reserve currency. They want that sanctionability, and I think that's where there's some competition. You say, well, we want to reduce the trade deficits, even though the trade deficits are what supply the world with dollars to be the world reserve currency, but we also want to keep the reserve currency because we want to be able to sanction anyone we want. And those are kind of competing dynamics. Now, maybe, decades ago during the Cold War, it was more advantageous to have the global reserve currency than to not. But now that the negatives have kind of accumulated and are front and center in politics, in some ways, ironically, the downsides of being the primary reserve currency might be outweighing some of the benefits. It depends who you are. If you're the U.S. government, you want reserve currency because you want to be able to sanction anyone. If you're Wall Street, you probably want the world reserve currency. um, but if you're industry, you're kind of the one that's on the wrong side of this whole apparatus. And one of the solutions there is basically say, well, instead of all these countries storing excess savings in dollars, treasuries, and U.S. stocks.
Bitcoin's price has recently settled above the $100,000 threshold. However, experts advise that this level may not be maintained in the long term. Ali Martinez, an experienced cryptocurrency expert, cautions that Bitcoin may face a bear market in the coming months, drawing insights from historical price trends that typically follow its halving events. Upon reviewing historical cycles, Martinez observes that Bitcoin attained its maximum value 367 days post the 2012 halving, 526 days following the 2016 halving, and 547 days subsequent to the 2020 halving. 2020 halving. Considering that Bitcoin is presently 276 days post-halving in 2024, historical patterns indicate a possible market peak may arise between May and October 2025. This forecast is consistent with historical cyclical trends, indicating that Bitcoin tends to undergo significant rallies following halving events, subsequently transitioning into a bearish phase. In addition to historical trends, regulatory and macroeconomic factors are influencing the trajectory of Bitcoin. The supportive position of President Donald Trump's administration towards Bitcoin, especially through policies that restrict central bank digital currencies, CBDCs, and enhance Bitcoin's credibility, has contributed to an optimistic market outlook. Furthermore, the trend of institutional adoption is on the rise, as major financial entities like Morgan Stanley enhance their investments in Bitcoin, thereby bolstering investor confidence. While there is a prevailing sense of optimism in the market, the sustainability of prices is contingent upon critical technical levels. Experts identify $97,877 as a pivotal support level. Should Bitcoin drop beneath this mark, positive market sentiment may diminish, which could result in heightened selling activity. Optimistically, projections indicate that Bitcoin may attain a value of $170,000 by March 2025, supported by rising institutional investment, heightened on-chain activity, and the prospective introduction of more Bitcoin exchange-traded funds, ETFs. Furthermore, the derivatives market is exhibiting increased speculative activity, as evidenced by the record highs in open interest for Bitcoin futures. This indicates robust investor confidence. However, it simultaneously heightens market volatility. The prevalence of leveraged positions has the potential to exacerbate price fluctuations, thereby increasing Bitcoin's susceptibility to liquidations should critical support levels be violated. In the near term, Bitcoin's trajectory will be influenced by its capacity to maintain existing momentum in the face of overarching economic uncertainties. Key elements, including Federal Reserve interest rate adjustments, inflation metrics, and patterns of institutional accumulation, are expected to significantly impact price movements in the near term. Should macroeconomic conditions stay positive and institutional demand persist, Bitcoin may experience an extended rally prior to a potential cooling-off period in late 2025. Investors ought to exercise caution, as historical trends indicate that the ongoing bull cycle may be nearing its conclusion, potentially leading to a market correction. Let's get back to Lyn Alden interview.
Gold or Bitcoin or other types of global assets. Um, but that's more of a conscious trade-off that I don't think this administration wants to make. The prior administration didn't want to make it. So I think it's probably a longer term process, and Bitcoin has to get much bigger before it really enters those types of discussions as a kind of a reserve asset at scale. Right now we see El Salvador holding it, we see the Kingdom of Bhutan holding it, potentially some Middle Eastern countries holding it. But in order for it to be like this, massive reserve holding among countries, I mean, at least has to get half as big or as big as gold. So basically, have to add another zero to the to market capitalization, and then it actually starts kind of being really relevant as potential alternative as like a large scale reserve asset. I incline in that direction. So the biggest things I would watch, one is global liquidity. Now the potential risks to global liquidity are tariffs or anything that would spike the dollar. But that's offset by the fact that we have a president that generally wants higher asset prices, that would generally not want a super strong dollar because he would perceive it as going against his trade policies, and you potentially even label certain other countries as currency manipulators if they let their currency weaken too much relative to the dollar. So these with some bumps in the road, I expect decent liquidity this year, which probably is supportive of Bitcoin and gold. And then I also look at things like kind of Bitcoin's own metrics. So when I look at, say, market value compared to on-chain cost basis, so market value versus realized value, I like to look at those types of ratios to see kind of how euphoric is the network. And so far, it looks nothing like prior major multi-year tops. It looks kind of middling in the road in terms of that metric. Similarly, when I look at, whenever there's a major bull run, there's like the hodl wave. So how what percentage of coins haven't moved in over a year? And when you get a major bull run, that number starts to dip because you have a number of long-term holders that are up 5x or 10x, 20x in their position, and they start trimming into that strength, and new buyers are buying into that strength, and that eventually can exhaust new buyers. And the rotation we've seen is still smaller than prior major cycle tops. So when I look at in the Bitcoin space, it looks like that still has room to run, and then I generally expect both politically now there's some green lights on it, and then also liquidity wise, uh, while there's potentially some bumps in the road, I don't really see like a major negative turn in liquidity, and therefore I generally expect that we probably will see higher highs in Bitcoin this year.
Bitcoin is approaching a critical juncture, with the potential to surpass the $116,000 resistance level, which may pave the way for a new all-time high. In light of the recent market fluctuations, Bitcoin continues to exhibit robust bullish momentum, supported by market indicators that imply additional upside potential. The Mayer multiple, an important indicator for evaluating Bitcoin's market conditions, is presently neutral. This suggests that the asset is in a stable state, which could facilitate additional gains without an imminent threat of a price correction. Bitcoin's market dominance has increased to over 57%, aligning with a 4-year cyclical trend that has typically foreshadowed significant rallies. This pattern reflects the 2020 cycle, during which Bitcoin's dominance increased from 60% to 69%, driving a notable bull market. Should Bitcoin establish $116,193 as a support level, the subsequent target for upward movement may be $134,280, further solidifying its bullish trend. Failure to breach resistance could result in consolidation or a potential decline below $100,000, which would test investor sentiment. Institutional adoption serves as a significant driver for Bitcoin's price movements, especially within the exchange-traded fund (ETF) sector. Nasdaq has submitted a rule change proposal for BlackRock aimed at adjusting the operational framework of its iShares Bitcoin Trust. The proposal seeks to facilitate in-kind creation and redemption, permitting ETF shares to be directly exchanged for Bitcoin instead of cash. This transition has the potential to improve liquidity, minimize inefficiencies, and draw in institutional investors looking for a direct exposure option. James Seifert, an analyst at Bloomberg focusing on ETFs, emphasized that BlackRock should have possessed this flexibility from the outset, highlighting the critical role of in-kind transactions in enhancing ETF operations. On the same day the filing was submitted, 6 more crypto ETF applications were filed in the US, indicating an increase in institutional demand and further validation of Bitcoin within the traditional financial landscape. In addition to ETFs, macroeconomic factors are significantly influencing Bitcoin's path forward. The Federal Reserve's monetary policy decisions, inflation metrics, and liquidity provisions in financial markets may significantly impact Bitcoin's capacity to maintain its existing momentum. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.